how important APIs were to your proposition. Now, was that part of the vision at the time? Was it from the very outset, people are going to want to consume APIs, or was that quite accidental?
Back in those days, there were a good 3 or 4 occasions where we nearly had to pull the shutters down because we were running out of money. I remember at one point we were thinking about, let's be in the office and let's these 3 people go and we can operate the business around Nigel's kitchen table.
So looking back at that with the benefit of hindsight and the scar tissue, is there one piece of advice you give to founders that's kind of nearly universal?
Behind every overnight success, there's a 15-year journey of purgatory. It was hard work. We nearly pulled the shutters down many times in the early days.
What you read in the media outlets when success seems almost predestined.
The best thing about having an API-led platform is you can sell it to anyone. The worst thing about having an API-led platform is you can sell it to anyone.
For the next 5 years, we're in a bit of a weird time with AI. What do you expect for the next 5 years? This morning I've got Stephen Lemon, one of the co-founders of Currency Cloud, with me. We're going to be talking about what that journey looks like, taking on his reflections from the journey, but also looking ahead at his current project, which is Volution Venture Capital, and getting his views on the fintech market and innovation. Stephen, thanks very much for joining me.
Pleasure to be here.
Right. So what I'd love to do is start off with Currency Cloud. And, we had one of your co-founders, Nigel, on at one point, but one of the things I love about the founders' journeys is that they're always more real and inevitably very different from, what you read in the media outlets when success seems almost predestined. What was the journey like founding Currency Cloud for you?
Was that they say behind every overnight success, there's a 15-year journey of purgatory. It was not linear, not straight line. It was hard work. We nearly pulled the shutters down many times in the early days. And I'd love to say that it was all mapped out and we knew exactly where we were going, but we didn't. I remember meeting Nigel and there were a number of, wouldn't it be cool if we could do this type of conversations? But to end up ultimately on the journey that we ended up on and building a unicorn and exiting to Visa, that was pipe dream, really, I guess. It wasn't actually part of the plan per se, other than we wanted to build a meaningful business using this new technology called the internet. It was fun. There were some challenging times along the way, but on reflection, I mean, you always look back on these things through rose-tinted spectacles, but it was fun. It was a great thing to be part of.
Did you see the business going through distinct kind of phases of growth where, it felt very different to the previous one?
The first time you're going on this journey, it's quite, and you've got your face to the nose to the grindstone. It's quite difficult to see that at the time. But I think now, with the benefit of certainly hindsight, but also the ability to rise above it a little bit and have a bit of perspective on these things, and obviously what I'm doing now on a daily basis, you can look back and see the phases and actually apply the theory to the practice. Obviously, we were learning by doing at the time, but now I can recognise, yes, there were clear phases, discovery phases, learning about the market. Not practicing, but experimenting with different go-to-market motions and different marketing processes. And there were phases of certainly from a go-to-market point of view, phases that we did incorrectly for an extended period of time, which in hindsight, if I were doing it again, tied off and changed a lot sooner. Similar with product, actually, a lot of misadventures and engineering cul-de-sacs along the way. But I always take the view that whatever doesn't kill you or the business makes you stronger, and it's the learnings that are invaluable.
Well, it's saying hindsight's 20/20, and it's true, isn't it?
Yeah.
One of the things that you said to me when we've talked previously was that you felt that you got product market fit quite late.
Yeah. So look, we started out. I remember the question Nigel posed to the team actually was, why is it more expensive to send a payment to the United States than it is to send a package of cash via UPS? Why does it take longer? And from my background, I was running a retail business at a service-led FX brokerage prior to joining the business with Nigel. We had 2 businesses, a B2B business and a B2C business. I ran the retail business, the consumer business, and on the other side of the building, they were selling to finance directors, charging 20 basis points to do $1 million transaction. On my side of the business, we were charging 200 basis points to do a similar size transaction. And we justified it because we were hand-holding the retail customer, educating them and what have you. But the reality was we were capitalizing on customer naivety and capitalizing on the disconnect to the market and the opacity of foreign exchange. So fast forward to when we launched the business that would become Currency Cloud. We were very, very innovative. We were first to market with complete pricing transparency. We gave the customer their rate alongside the market rate. We were consistent in our pricing. We gave them a set pricing schedule, and we were certainly first to market with FX and payments available through an API. That then obviously evolved to become the category of embedded finance. Now, did we realize that we'd end up creating a category? No, of course we didn't. Were we planning that? No. But I mean, credit to Nigel, he was very, very visionary on these things. Actually, he drove both of those things. And the concept of having an API-led platform was great because we were talking about, well, you can actually access our services in an application that you're already using, perhaps an accounts package or a user interface that they're using for other purposes. You can embed our functionality. But people weren't really consuming APIs back then. This was 2011. And it was obviously very, very difficult to find product market fit if there are no API endpoints to integrate to your API. And I remember, I always look back and think that we kind of were the class of 2012 because we'd just completed our Series A. We'd just reiterated the platform. We had a very, very easy to use API at this point. But we had other companies coming through. That's when we started speaking to companies like Cantox, Asimo, TransferWise. We signed up with all these guys when they were nothing more than business plans. But they were all looking to build on our API, and that's when we knew that actually we're onto something here. And kind of the venture-backed innovative tidal wave of fintech really started to happen. And that, I think that might even be when we started talking about ourselves in the context of being a fintech. Prior to that, it was new finance. So yeah, we were fintech before it's fintech.
When did you really start to feel that traction? How far in was it?
So we launched at the beginning of 2009. And yeah, I remember it was the first 6 months of 2012, we started really thinking that actually this might be something. But obviously it's not like a switch. It didn't just flick. There wasn't a whole market there. Revolut didn't come through until 2014, I think it was. But it just gradually grew, and there were misadventures along the way, and there are companies that we signed up that didn't make it themselves as fintechs. But we knew that we had to graduate up and start being able to sell our infrastructure into bigger organizations that already had the transactional flows and the customers to serve. But obviously you spend your time building credibility as a business before you can sell into those organizations. So that kind of progress didn't really happen for a couple of years until a couple of years later.
David Jarvis from Griffin described that perfectly, which he said we're eating our way up the credibility chain, and it's right, because you're not going to go in and do those big deals on day one.
Yeah, we were certainly kissing a lot of frogs along the way, that's for sure. And some of it is great because some of the companies that we signed up when they were nothing more than startups themselves went on to be fantastically successful. Many of them didn't, unfortunately, but that's just the law of attrition, I guess.
But I suppose the interest rate environment at the time was quite forgiving as an incubator for so many.
Yeah, I mean, as we've seen the venture ecosystem recently, the artificially low interest rate environment, and it was artificially low. If you zoom out it and then look at interest rates over the years, that period of time, certainly following the financial crisis, interest rates are close to zero for such an extended period of time. It was a simulation. It's not a real environment.
We got used to it though, didn't we?
We did get used to it because there's a lot of hot money looking for return, and a lot of disillusioned smart people coming out of banking, and a lot of fund managers looking to put cash to work. So you saw a wave of venture capital firms coming to prominence, investing in smart teams with innovative ideas like us, like TransferWise, like Revolut, like Cantox. And the ecosystem just flourished in that environment. I don't think the UK would have its fintech moment without that interest rate environment. I don't think you'd see that level of germination now. But having said that, we have the ecosystem and it will continue to grow. So
With, I mean, you talked about how important APIs were to your proposition. Now, was that part of the vision at the time? Was it from the very outset, people are going to want to consume APIs, or was that quite accidental? Because a lot of what happens in startups is serendipity, isn't it?
I'm laughing because I remember uttering the immortal line, "What's an API?" The original vision was, you have to remember, I'd come out of an environment where we were a service-led brokerage. So I had a team of, I don't know, 85 people in 5 different countries, serving consumers, retail customers, buying holiday homes or migrating or what have you. It was all very much customer service focused, phone based, and my team of dealers would execute a trade over the telephone. They'd manually write a trading ticket and put it in a tray, and then every 3 or 4 hours, somebody would come down from the back office, take the trays up, and transpose those trades into 3 different and disparate systems in the back office. And the thing that we were trying to achieve in the early days was straight through processing and transactional automation, and pushing the administration into an environment the customer controlled, so they could self-serve with an online platform. And in the early days, we were selling a white label version of our user interface to allow the brokers and the payments companies we were selling to empower their own customers to self-serve. Then we had this idea, wouldn't it be a great idea if you could embed that capability into applications and services that your customers are already using, rather than having to use a separate standalone platform? And this, I think, was more geared towards the business customer, the FD. FD said, there was a lot of discussion at the time about finance directors having multiple platforms. They had to log in and out of banking, accounting, cash flow management, cross-border payments and what have you. And of course, this was before payments became a thing as well. This is all about FX management and actually just executing the payment, and then the ecosystem flourished. But certainly, as more people started recognizing the power of interconnecting different applications and services through APIs, that's when the market came to us, I think.
It's quite amazing to think actually how far many kind of back offices have come, and how kind of prolific what you described was, with the people wandering up from floor to floor with handfuls of paper. That
Quite crazy when you think about it.
you were responsible at Currency Cloud for the partnership.
Yeah, so towards the end, I built out the strategic partnerships functions to support the Visa relationship. Actually, we very quickly realised that the partnership we had with Visa was not worthless on its own, but it wouldn't reach its potential unless we went out and partnered with a lot of enabling technology partners and other distribution partners. And in parallel to this, I had to build up the enterprise sales organization as well, because through Visa we were eating away up the value chain, selling into banks. And the Visa relationship was great, actually, because we were very, very dominant in fintech, whereas MasterCard had stolen a march on Visa at that point, in the fintech ecosystem, whereas we wanted to move into the banking ecosystem, and obviously Visa were utterly dominant, certainly from a debit card point of view. They were utterly dominant in Europe. So we had this relative strengths and opportunities that we had with one another. But we very, very quickly realised that in order to eat our way up the value chain and start serving enterprise customers and bigger businesses, banks in particular, a bank isn't going to be able to consume your API in isolation, and they're certainly not going to take a payments platform like ours and inculcate it into their own systems, because if that goes wrong, it would be catastrophic for them. Not to mention the ability to prioritise the engineering work required to diligently internalise the process that you're offering. So we very quickly realised that the way into the enterprise was through partnerships, taking our capabilities, embedding it into technology providers that are already in use by our target audience. And that was a fun realisation that actually direct sales isn't everything. Actually building out the channel and collaborating at a product level is important.
I mean, they're all the product. The channel, direct sales, and marketing they're all quite interconnected, and it's different from business to business. But can you give, your observations on each of those pillars?
Yeah, it's interesting because you can go too early in trying to build out a distribution channel, a partnership-led distribution channel. You have to have good product market fit on your core proposition, so you know what works and you know the problems that you say you're solving are real problems, and the solution that you are offering works, because it's always far better to be a painkiller vendor rather than a vitamin vendor. So there are many things you need to learn there. Does the product do what it says it does? Is it solving a real problem? Is it a meaningful problem that many organisations and people have? Is it a replicable solution? Can you industrialise the distribution of this without having to do too much work on your own product? And then you've got what's the go-to-market strategy? How do you sell this? What are your unit economics? Is this a product that can you get product-led growth, or is it sales-led growth? What's your cost of sale? What's your sales cycle? What's your conversion rates? What's your target audience? What are your win rates, and all that sort of stuff? And once you've got an idea of what that looks like, you can then start looking at potentially industrializing it further with the leveraged effect of distribution partnerships, whether that's just over reselling or technical collaborations. But they are necessarily symbiotic, I think. You could go too early in trying to industrialize and replicate a sales process that you haven't proven that works, because if you don't know how to sell your proposition well and clearly, and if you can't articulate the problem statement that you're addressing and the solution, how can you expect a partner to be able to do that? So it's really important that it comes together, but obviously you'll know this with your background as well.
Yeah, it's a really interesting point. I mean, because partnerships is such an incredibly broad term. I think what you're describing is almost value-added resellers, where they are, being trusted with the entire sale, as opposed to potentially a lead generation machine where they might identify the opportunity, but it fundamentally gets brought back to be handled by a skilled and well-enabled.
Yeah, I refer to that. That's an introducer relationship. I mean, but the reseller, I mean, that's something that you guys did really well at Mambu. I remember with the engagements we had, the partnership function that you had at Mambu was phenomenal. You were doing really well with that. But yes, you're right. It's a value-added reseller. I always think that the best partnerships are the ones where the unique joint value proposition cannot be replicated by going to the constituent providers independently. So there has to be something unique about that proposition that the buying firm couldn't replicate themselves.
You made a really good point about painkillers versus vitamins. I've not heard that for a little while. And I think I think it's relevant to all businesses, but I think particularly so when selling to banks, because they have such a finite bandwidth. They really only act on things that are mandated for compliance or really, really, really hurt them. And everything else just kind of languishes on this nice to do at some point in the future list, and kind of purgatory, I think was the word you used earlier.
Yes, selling to banks is simultaneously the most rewarding and frustrating thing you can do. You can see the spark of recognition in your eye there as well. Yeah, we can compare scars on our backs later, but no, it's to your point. If selling into banks is really, really difficult. I mean, enterprise sales in itself it's a science, not an art, actually, because there are many stakeholders you need to align, and you need to really understand what the immediate pain point is, who has that pain point, the first, second, and third order impacts of that. You need to get budget aligned. You need to make sure that all the stakeholders get aligned, and this is a real thing that is recognised throughout the organisation. You need to triangulate what's being told to you by the various people that you're talking to. But this all takes time, and obviously within the banking environment, it takes even longer because they've got many, many things on their plate that they're trying to manage, and frustratingly, the people that you're dealing with often move out of position or move to an entirely different bank whilst you're still on this this journey with them. So to your point, if something is mandated from a regulatory point of view, there's a regulatory tailwind or there's a regulatory threat that they have to deal with, then that makes life an awful lot easier. More recently, I think banks have recognised that. I remember in the not the early days, the mid days of the fintech wave, would go to conferences and there would be the banking environment and then the fintech environment, and eventually those two kind of, you know, like banking fintech's the same thing, and then obviously the DeFi thing came and was the new thing on the side. But it's interesting how they're all coming together now. But there was a recognition that the fintechs had the ability to offer better customer propositions, certainly from a consumer point of view in the early days. They were unencumbered by legacy technology, legacy processes, legacy thinking, and there were all sorts of narratives going around about the legacy infrastructure that banks ran on, and COBOL. Nobody knows how to code in COBOL anymore, and you're wheeling people out of old people's homes to put patches, all sorts of horror stories like that. But and for years, banks were trying to find ways to collaborate with fintechs when they realised that actually we shouldn't be competing here. We should be trying to collaborate. Yeah, it was challenging times, but the way to do it was just to partner through the tech vendors.
So on your journey, as one of the things I like to, one of the stories from my past is that I've now worked for 3 unicorns, and 2 of them came so close to going bust that they had to pay people with equity at one point. And those are the stories that get lost in time. They don't realize that these incredibly successful businesses, how close they come to being nothing. Were there moments, multiple moments at Currency Cloud where you thought, Christ, this might be it?
Absolutely. I'm going to tell this story quite often, but the first office we were in when we launched the business, did our friends and family round. I think we raised £500,000, which is, it's amazing how far we got with that money actually back then. But one of our shareholders had a piece of real estate on Finsbury Square. I rode past it on the way here actually. It's now the Alphabeta building. But we were in a dark, dank, damp-infested, windowless basement, and we had this massive storeroom that was I think there was a server rack in there actually, but we didn't have access to, there was no daylight. So in the winter we were like pit ponies who'd come to work in the morning and it was dark, spend all day working, and then leave the office in the evening and it was dark. So during the week we were like pit ponies. But back in those days, yeah, there were a good 3 or 4 occasions where we nearly had to pull the shutters down because we were running out of money. And I remember at one point we were thinking about, right, well, let's bin the office and let's let these 3 people go, and we can operate the business around Nigel's kitchen table. But luckily it didn't come to that, but it came perilously close a couple of times. And we got the Series A fundraise done, led by Atlas Ventures, which was Fred Destiny's at Stride now. He's back with his partner Atlas, and we got that fundraise done, thinking that's the hard part done. Series A, brilliant. We've got the capital. We can now go and build the platform properly, build out a bigger engineering team, go faster, and we'll be able to raise a Series B when we need to. But Series B was harder than A, and C was harder still, actually, because going back to the point we were talking about earlier, it took us a while to get product market fit. We were quite early. We had in many ways, we had a solution looking for a problem, but luckily the problem came to us in time. But obviously, the challenge that you've got when you're early in a market is this: you're creating the go-to-market strategy as well, which I'm quite happy to admit in the early days we didn't optimize, we didn't get right. Luckily, we fixed that latterly, but and it's crazy to reflect on those days and the difficulty that we had, and then think towards the end we were synonymous with cross-border infrastructure. We were one of the few organisations that always got a call if you're thinking about doing something innovative in terms of transforming the way you manage your cross-border, or you're looking to build a proposition that included cross-border. We were synonymous. Fantastic journey to have been on.
It's a double-edged sword, isn't it? When you're creating a category, you're first to the market. If you're too early, you're dead because you're waiting for the market to catch up. But if you time it right, or if you can survive long enough, as Currency Cloud did, you, as you said, you become synonymous with that category. What's the saying? If you want to win, be first, be last, be different.
Yes. Yeah. I mean, one of our early investors, Sean Park at Anthemis, he always had this tagline: "Skating to where the puck will be." It's ice hockey. He's a massive ice hockey fan. In fact, I think he was an ice hockey player. But it's indicative of the speed of the game. You can't catch the puck, so you just need to position yourself to where it's going to be, and that's what we did. I'm not saying we did that deliberately, but but we felt that there was an opportunity there. We felt that the market would become more technology focused. And look, for context, when we had this concept of building an internet based platform, we'd already seen this level of innovation and disruption in the equities world. You were seeing the rise of CFD brokerages and online equity trading. Amazon was a thing just coming through. Alibaba was just coming through. E-commerce wasn't as huge as it is now, so it was still very, very early. But yeah, we were very fortunate to have been in the right place at the right time, I think.
So looking back at that with the benefit of hindsight and the scar tissue, is there one piece of advice you give to founders that's kind of nearly universal?
The act of building a business is never done. I remember thinking many times along the way, it's like, well, if we can just get this done, then we're there. But of course, you're never there. There's always something to be done. There's always something to be finessed, and it's constant experimentation. But deliberate experimentation. And one of the key things that I learned is you need to be able to measure the variable outcomes of an experiment. So you need to control the inputs of the experiment, so you can identify and separate the signal from the noise on the outputs. If you've got multiple variables going in, then you've got no idea. That's not an experiment. You're just taking pot shots. I always used to joke about the and one of the learnings we had about the transforming the go-to-market. I always used to joke about the fact that the best thing about having an API-led platform is you can sell it to anyone. The worst thing about having an API-led platform is you can sell it to anyone. And we had a CRO come in later on the journey, and he went through a process. And to cut a very, very long story short, and a 3-year transformation journey into 30 seconds, we identified that we were selling to 39 different business segments, and we were using the same positioning, same messaging, pretty much the same pricing, and the same web pages effectively, and the same marketing collateral. And I think at this point I was still responsible for 50% of the revenue that the company did. We were 8 or 9 years in at this point, and 50% of the customers and the revenue generated from those customers was attributable to me. And we'd spent the last 3 or 4 years pointing the finger at me collectively, like, why are you hiring the wrong people? Why can't we train these people? And what we realised was, in hindsight, we were getting good salespeople in, but we weren't giving them the playbooks that they needed. And effectively, every deal that I did was a first of a kind deal, as opposed to an industrialized sales process. So we condensed the number of business segments that we sold to from 39 to 9, I think it was. And there are many, many other initiatives in the go-to-market that we did at the time. But what we realized, by focusing on a discrete number of business segments and having dedicated language, positioning, messaging, pricing parameters, and collateral, and speak to these target companies in a language, in a mode, in a place that they know when they're at, you can be far more effective. So you can do less by doing. You can do more. You can achieve more by doing less.
That strikes particularly close to home. In fact, I was actually talking to a client, CEO, recently, who asked me a question: can I have multiple ideal customer profiles? And it's a tricky one, because you technically can, but every one you add dilutes your focus, not linearly, but by an order of magnitude. So
a colleague of mine that I work very closely with said, you can do anything you want, but you just can't do everything. And it goes back to the point I was making earlier about the learnings and the experimentation. When you're very early stage, you've got to throw all the mud at the wall and see what sticks. but when you can see the slow moving mud, it's like, right, that's where we focus. That's where we focus. And then you experiment with that particular type of customer. Right? Can we get more of those? That's working. What's working? Why is it working? It's not just why aren't these other approaches working? It's why is that working? What's resonating there? You go and you bottom that out and you specialize as much as you can, and then you move on to adjacent segments. But there was a moment where we all got religion as a business, and everybody it was required reading, Crossing the Chasm, and it was like a real. We've been doing it exactly wrong for so long. And actually, we changed that around and focused on a small number of ideal customer and at this point, we were too big an organisation to only focus on one ideal customer profile. So we focused on a handful of them, but we had the bandwidth to specialise on a handful of them, and it was the transformation was incredible.
One of the things that you mentioned to me when we've had coffee in the past was about organizational health. And you were really evangelical about a period in your journey where the exec managed to kind of level up how you work together as in a team. Can you tell me about that?
Yeah, that was. I always talk about this in my new career. It's like a below the fold activity, because everybody knows that if you've got a problem statement that you can coalesce around and address, if you've got a product that serves that problem, all you need to do, in inverted commas, is build the right go-to-market motion around that, and then you've got a business. But actually, what we came to realise was the sales organisation in any business, even a sales-led organisation, the sales motion is just the spear tip, and you can sharpen that spear tip as much as you like. But in order to gain momentum and inertia, you really, really need the wood behind the arrow. And that wood is the entire organisation aligning behind your objectives. And that's to go and serve that particular type of customer in that fashion. You could have the sharpest spear tip in the world, but if you don't have the entire organisation aligned and helping you at every stage of the way, and every decision that they're making considered through the lens of that objective, it's going to be very, very difficult, and you'll get to a point where you run out of sales-led momentum, and the fact that the rest of the organisation is maybe going in a different direction really starts to pay. And we came to realise this. We got to a point where in the early days of the business, we didn't necessarily have the right leadership atop of every function, but even when we had the right leadership sitting on top of every individual function within the business, and those functions independently were running fantastically well, we were still misfiring. We still weren't quite really achieving the hypergrowth that we knew we could be achieving. So this comes back to the concept of organizational health. And actually what we realized was the leadership teams needed to recognize that they were in a team of leaders as well as on a team of their functional reports as well. So we went through, you mentioned the Turbo Group, we went through a process of reinvigorating the organizational health, and the Patrick Lencioni books, again, another one we got religion on, talks about the 5 dysfunctions of a team. And at the bottom pyramid, the foundation of a good team of peers is vulnerable trust around the executive table, rather than everybody being guarded and defensive about what's going on in their function and just staying in their lane. It's about putting your head above the parapet and actually leaning on your peers when you need help, and leaning into your peers when they need help, and just being completely open about it and recognizing that you're a team. You're not, this isn't a political Shark Tank. This is a team. We if you've all got the same objective and you're all aligned on that objective, then that's the direction, and you kind of get pulled forward in line behind the objective. So we went through a bit of a process led by the Turbo Group on that to kind of get everybody aligned, and that was transformational. We ran the processes down through all the leadership functions and leadership levels within the organisation, and then we ran the process on the individual go-to-market teams as well, and it was phenomenal. Changed the business cadence and the operating routines that we had, and it was transformational.
I think it's probably one of the most underrated
Yes.
things in business.
Yep.
You have all these departments that act with their tribal interests and then expect them to the business to suddenly work without dysfunction.
Yeah, it's phenomenal. Even a very very small level of misalignment can misalignment at this stage leads to down the road a huge level of disparity in where you're going. Um, that was one of the biggest impacts of the business actually, I think.
So moving forward and now looking at what you're doing now in venture capital, I mean, mm, ZERP era has ended. It's a very different world than it was 4 years ago. What does the fintech investment landscape look like to you today?
So the context is we sold Currency Cloud at the end of 21. The deal closed December the 22nd, 2021. And I left the business the following April, took some time out and joined Volution in September. And I'd love to say this was deliberate, but when we sold Currency Cloud, we sold at the peak of the market. We got a ridiculous multiple on our top line number, 17x, I think it was. And looking at where multiples are now, it's less than half that. But obviously, what many people overlook is the act of building a venture business is a business as well. We have investors, so the investment ecosystem and certainly the willingness of LPs to invest in venture funds was pretty much drying up just as I joined. so I remember we one of the things that we said when we were launching Currency Cloud is well, the business that would become Currency Cloud was, well, we'll build a business in the wake of the financial crisis. We'll get our operational cadences and routines established, and we'll catch the next economic cycle, and then we'll exit 7 years later. How hard can that be? Well, that was really hard. And I found myself joining Volution at a similar juncture, possibly the hardest environment ventures seen, certainly in the last 20 years or so in Europe. So it's been a very, very difficult couple of years from a fundraising point of view. We got the first close of our second fund done at the end of last year, so at the end of 24. So 2 years into my journey. And we're now deploying and investing in fintech and enterprise software businesses, any organizations that are driving efficiency in the capital markets and or productivity in the workplace. We invest post Series A. We think there is a large and growing gap in the funding ecosystem between A and B, as evidenced by my experience at Currency Cloud. It was there then, and it's bigger now. So we invest into that gap, and we help organisations. I'm not going to say maintain momentum, but increase momentum to reach the trajectory they need to get a meaningful Series B done, as opposed to a compromised Series B. And we leverage our experience as recovering founders, ex-operators ourselves, and I think the ecosystem it's healthy. There's a lot of companies out there that you wouldn't want to invest in, but that's always the case. But there's certainly a rich vein of companies coming through that are looking at things differently, and there's a huge amount of opportunity in terms of some of the infrastructure changes that are coming through at the moment. AI, stablecoin. I mean, everybody's talking about those at the moment, which presents challenges as well as opportunities. But the short answer to your question is it's good. There's still a lot going on, and it's great to be in a position to actually deploy as opposed to having to sit from the sidelines whilst you're working maniacally in the background fundraising.
What advice do you give for your clients, your portfolio companies on deploying that money? Because 2021, it was growth at all costs. Are you encouraging prudence, or for those special companies that you consider hyper growth, are you still driving them to be bullish where they see growth?
It's interesting. You just refer to our portfolio companies as clients. It's our investors are our clients. But the flip side, I'm an operating partner of the business. So I'm leveraging my operational experience and journey to help our portfolio companies go faster. I run our experts network. I run our professional services partners network. So collectively, we help our companies navigate the landmines in front of them I'd love to say we can help them see around corners, but perhaps that's not possible. Um, but we can certainly help them. Look, we back smart people, um, and at the stage at which we invest, they've proven the model. They've proven that there is a viable business underneath, and they've got a problem statement that they've identified, a solution they've identified. The technology has been de-risked. The management team largely should be de-risked. They should have a replicable go-to-market strategy, and it's just about how to scale that and do more. And all we can do is bring to bear our experiences and observations. It shouldn't be on us to tell them what to do. And if you back the right people, there'd be a very short conversation anyway. I'm just thinking about some of our founders; they just wouldn't entertain that conversation at all. And that's the way it should be. You should be backing people that have got absolute belief in what they're doing. Some of the best founders I've met on my journey, inside Evolution and outside Evolution, is that, let's just say they're not short on, they're not long on imposter syndrome. And that's what you need. You need to be absolutely adamant in what you're doing. So there's no telling people what they're doing wrong or what they should be doing differently, but certainly you can be drawing out conversation with clever questioning.
It's interesting. Earlier on in the conversation, you talked about a currency cloud, the mistakes that you made, or the situations that you let persist for a little bit too long in hindsight. And it's those, isn't it? Is, every startup or scale up business is built on iteration, but you probably imagine a bit like me in my work, try and make those iterations fewer and the time between them less, to increase the chance of survival.
Yes, so, yeah, more experimentation. And look, the ecosystem is far more mature now than it was back then. I'm like, where are we, 13, 14 years ago? That makes me feel old. 13 or 14 years ago, there wasn't the ecosystem where you could go and ask for help. There weren't incubators or accelerators. Mentoring wasn't really as prolific as it is now. And certainly back in those days, I found myself thinking I have to have all the answers, and to reach out and ask for help or to reach out and take advice that's a weakness. Which obviously is ridiculous. It's a ridiculous notion, always has been. Even back then it was stupid. But again, that's just one of the learnings. It's okay to reach out and recognise that you don't have all the answers. What you need to know is how to get the answers. Mm-hmm. But the ecosystem, it's a lot more. So the ecosystem is a lot more engaged, a lot more proactive. I mean, you can't help but trip over some kind of startup or some sort of ecosystem event every night in London nowadays. There's always something going on that is intended to help founding teams and entrepreneurs move forward.
So for the next 5 years, we're in a bit of a weird time, to be honest, with AI. The world is a little bit upside down. I think it's always been hard to predict what's next. But what do you expect for the next 5 years? It's an impossible question, isn't it?
It is an impossible question. Look, we are a hugely exciting time, and I think people were talking about hugely exciting times when Bitcoin started materializing and decentralized finance became the thing. And I used to get really fed up with people talking about we're using distributed ledgers for this, that. There's clearly solutions looking for problems. But I think many people would agree that this time it is different because of the applications and the potential of AI is so universal and potentially ubiquitous. Everything is going to change. Everything is going to change. I mean, you can't even take deep fake videos have never been so easy to do. You can't take anything for granted now. Where that goes, I don't know. I think you need to just stay focused on constant themes. And what I mean by that, technology in itself isn't going to build a successful business. It's the business model that is enabled through the new technology that is going to give you the ability to build a new business. So some things will always be true. What is the problem you're solving? Who has got the problem? What's the size of the problem? What's the resultant financial quantum? How do you solve that? Can you create a unique solution? Can you get distribution of that solution? Technology is just enables you to do that in a way that you couldn't do previously, and leads to different business models. And one of the implications of AI could be radical efficiency. Ironically, I think Ben Affleck is worth quoting here. He was being interviewed and on the proliferation of AI and its impact on Hollywood. And he was talking about the difference between a craftsman and an artist. A craftsman is very, very good at what they do. An artist knows when to stop. And I think it's all about, for me, it's taste, it's sense, it's understanding what is needed. AI is not sentient, and it never will be. AI can do things far more efficiently, far more quickly than human beings can do, to a point. So I think there's going to be a whole raft of companies that are doing things much more efficiently, much more quickly, differently, fundamentally differently. But you still need the human element. You still need that sense check. You still need that quality control. What I think could be interesting is one of the limiting factors we had building Currency Cloud was our access to engineering talent. We were always resource constrained in terms of the speed with which we could develop our platform, add new products, add new features, and what have you, because engineering talent was, one, hard to find, and two, when you found it, it was possibly too expensive. And we tried various solutions on that. But now you've got people spinning up MVPs in their bedroom over the course of a weekend. Lovable, Cursor, and all the other vibe coding platforms out there. You can build a working prototype in days, not months. So that, I think, if you extrapolate that out, I think you're going to see many different challenges, but you're also going to see a very, very fragmented ecosystem. What does the venture ecosystem look like in that environment? If you don't need to be investing in, if you don't need to be raising capital to invest in the building of the product, you're going to have a remarkably fragmented fintech ecosystem out there, or enterprise software ecosystem for that matter. And what does that look like? 5 years from now is an awful long time when you look at the speed with which things are changing at the moment. I mean, you look at the AI ecosystem now, even compared to even 3 months ago, never mind the beginning of the year, it's radically different.
One of, I think it's Bill Gates said, people overestimate the change in 2 years and underestimate the change in 10 years. But I'm not sure that's true anymore.
No, I think it's, I entirely agree.
Stephen, we're out of time. Thank you so much. It's I feel like we could have gone for another hour.
Yeah, I can't believe that was an hour, actually.